Here is a comprehensive and detailed breakdown of the dYdX cryptocurrency, the native token of one of the leading decentralized exchanges, DEX, in the world, focused on advanced trading features like perpetual contracts. dYdX is a decentralized exchange, DEX protocol, built for advanced crypto trading, specifically perpetual futures, perpetuals, which are the most popular trading product in crypto. The dYdX token is the governance token of the dYdX ecosystem, and with the launch of its own blockchain, its utility is expanding significantly. Unlike many DEX that only offer simple swaps, dYdX provides a trading experience with order books, margin trading, and leverage that rivals top centralized exchanges, CEX, like Binance or Bybit, but in a non-custodial, decentralized manner. dYdX addresses key issues in the crypto trading landscape: custodial risk. On centralized exchanges, CEX, users must deposit funds, giving up control of their private keys. This exposes them to risks like exchange hacks, fraud, or withdrawal freezes. Lack of advanced tools on DEX. Early DEX mostly offered simple token swaps via automated market makers, AMMs. They lacked the order books, margin, and leverage that sophisticated traders demand. Opacity and control. CEXs control the trading engine, fee structure, and listing process. dYdX aims to decentralize all these aspects, giving control to the community of dYdX token holders. dYdX has evolved through several versions, with the latest being its most significant upgrade. dYdX v1 v3 on Ethereum and Layer 2. Earlier versions operated on Ethereum mainnet and then moved to StarkX, a Layer 2 scalability engine based on ZK rollups. StarkX allowed dYdX to offer high throughput, low trading fees, and a better user experience without sacrificing the security of Ethereum. dYdX v4, the dYdX chain, a standalone blockchain. This is a fundamental shift. dYdX v4 is no longer a smart contract on Ethereum/L2, it's a sovereign proof-of-stake, POS blockchain built using the Cosmos SDK. Why? To achieve full decentralization and control over every component of the exchange, order book, matching engine, etc., which was not possible on a shared network like Ethereum. The chain is secured by validators who stake dYdX tokens. The dYdX token's utility has expanded dramatically with the launch of the dYdX chain. Governance, core utility. dYdX holders can create and vote on proposals that govern the dYdX protocol. This includes protocol parameters, trading fees, margin requirements, interest rates. Treasury management, how the community treasury is spent. Software upgrades, decisions on updating the protocol. Listing new assets. The community can vote to add new perpetual markets. Staking for security and rewards on dYdX chain. Users can stake their dYdX tokens with validators to help secure the dYdX chain. In return, stakers receive staking rewards from protocol inflation, new token emissions, and a share of the transaction fees generated on the chain. Transaction fee discounts. Users can receive discounts on their trading fees by holding and staking dYdX tokens. Community treasury. A portion of the trading fees on the dYdX chain is directed to a community treasury. Governance token holders decide how to use these funds, for example grants for developers, bug bounties, marketing. Token name, dYdX, ticker, dYdX, initial network, Ethereum, ERC20, but now native to the dYdX chain. Total supply, 1 billion dYdX, 1 billion tokens. Circulating supply, as of early 2024 it's approximately 280 million dYdX. Inflation, emissions. The dYdX chain has an inflationary model to reward stakers and validators. The inflation rate starts at a maximum of 7.5% and can decrease to 2.5% based on the proportion of staked tokens. Initial allocation, 1 billion tokens. Investors, 27.7%. Founders, employees, advisors, consultants, 26.1%. Future employees and consultants, 15.3%. Community treasury, 7.0%. Retroactive rewards, trading rewards, 25.0%. Liquidity provider, rewards, 3.0%. Founder, Antonio Giuliano, a former software engineer at Coinbase and Uber. He founded dYdX in 2017. Investors, backed by some of the most prominent firms in crypto, including a16z, Andreessen Horowitz, Paradigm, Polychain Capital, and Coinbase Ventures. History, 2017, dYdX founded. 2019, launched margin trading on Ethereum mainnet. 2021, launched V3 on Starkware's Layer 2, enabling perpetuals. 2021, distributed the dYdX governance token to past users. 2023, launched the public testnet for the dYdX chain, V4. 2024, dYdX chain mainnet went live. Buy. dYdX is a major token listed on all top-tier centralized exchanges, CX, like Binance, Coinbase, Kraken, and Bybit. Store for staking governance. The official dYdX wallet, web app, or Kepler wallet for the dYdX chain is necessary to participate in staking and governance. Hardware wallets. Ledger can be connected to Kepler or the dYdX wallet for secure storage. Software wallets. Kepler, MetaMask, for the ERC20 version, though migration to the chain is encouraged. Market leader. dYdX is a top-tier DEX by volume for perpetual futures trading. Real revenue and usage. The protocol generates significant fees from its active user base. Innovative technology. The move to its own Cosmos-based chain is a bold bet on sovereignty and performance, solving key scalability and control issues. Strong backing, supported by elite investors and a capable development team. Comprehensive token utility. dYdX is not just for governance, it's integral to securing the network and fee discounts. Intense competition. Faces competition from other perpetual DEX, for example GMX Gains Network, and the constant innovation of CEX. Regulatory uncertainty. Derivatives and leverage trading are a key focus for regulators like the SEC and CFTC. This could pose a risk to the protocol. Complexity. The platform is designed for advanced traders, which may limit its appeal to a broader, less sophisticated audience. Execution risk. The success of the new dYdX chain is not guaranteed. It must attract validators, stakers, and maintain liquidity and volume. Market volatility. As a trading-focused token, its value is highly correlated with crypto market cycles and trading activity. The dYdX token is the heart of an ambitious project to build a fully decentralized, community-owned financial exchange for advanced trading. Its value is directly tied to the success, usage, and fees generated by the dYdX protocol. The shift to its own blockchain is a high-stakes move that, if successful, could make dYdX the definitive platform for decentralized perpetual trading. However, it operates in a fiercely competitive and regulatory-sensitive environment. Disclaimer. This information is for educational purposes only and should not be considered financial advice. Trading perpetual contracts is extremely high risk. Always do your own research, DIY&RELAX, and understand the risks before investing in any cryptocurrency or trading product.